China just made a major move in the global financial system, and it could have a huge implications for Bitcoin and the entire crypto market. But what's really going on? Is this bullish, or is it a macro warning sign that markets are shifting in a way that we do not want? Today, I'm going to break down why China is telling banks to cut US Treasury holdings, how this ties into global liquidity, currencies, and investor confidence, and what it means for Bitcoin and crypto in 2026, and the big picture trend that could shape the markets in the coming months. So here's the basic headline. China has instructed its major banks to reduce their US Treasury holdings due to volatility and risk concerns. This isn't just random. Chinese holdings of US government debt have now fallen to their lowest level in 17 years. That's a huge shift from a decade ago when China held well over 1 trillion in treasuries. Let's put that into context. US treasuries are the world's benchmark safe asset. They fund America's government spending and influence global interest rates. Foreign buyers like China and Japan have historically soaked up massive chunks of that debt. But now China is stepping back. But why? China's regulators are worried about market volatility and the danger of being overexposed to the US dollar assets. And so they're telling big banks to pull back. This is not about China selling reserves held by its central bank. That's a separate piece of their foreign exchange portfolio. But it's about commercial banks' exposures. Let's zoom out and think macro. US Treasury demand is shrinking. When major holders reduce their demand for US debt, yields tend to rise, liquidity can tighten, and foreign capital shifts to other assets. That's significant because treasuries aren't just bonds. They are a global pricing anchor for the rest of the assets and the dollar itself. Sources tracking global trends show that foreign holders like Denmark, India, and China are all trimming US Treasury exposure. So we're not just looking at a one-off move. There's a broader doubt around the stability and risk of US bond markets. When confidence weakens, capital flows elsewhere. And on that elsewhere list, you can bet crypto is at the top. When big money gets spooked by traditional finance assets, it needs alternatives. Usually that means gold. That's the classic hard asset. Other FX reserves like the euros, the yen, or the pounds. And guess what? That's exactly what we're seeing. China, in fact, has been increasing hard asset holdings like gold, even while debt holdings are shrinking. Bitcoin, sometimes called digital gold, sits directly in this narrative. If bond markets are seen as less safe, investors start hunting for alternative stores of value. Gold, real assets, sometimes even crypto. So the question becomes, could this be bullish for crypto? There are a few big reasons people argue that this kind of macro shift could benefit Bitcoin. The first is diversification out of US debt. When countries reduce treasury exposure, they must put their capital somewhere. Gold is already rising, but Bitcoin has started to be seen as a valid alternative store value to gold. More talk of Bitcoin as digital gold means any disillusionment with traditional safe assets benefits crypto. Bitcoin and crypto historically performs well when liquidity loosens up. And if risk appetite increases, crypto often outperforms traditional assets. The third is weak demand for bonds could push rates higher. If yields rise because foreign buyers step back, then money moves away from low-yielding bonds and traders hunt for better returns, sometimes in high assets like Bitcoin. It's a macro rotation and it's not random. The fourth is dollar de-risking might hurt fiat dominance. Under this dynamic, the US dollar becomes less of the world's default reserve currency. That's a big story because it's exactly the sort of geopolitical backdrop where decentralized assets like Bitcoin gain as a non-sovereign hedge. But let's be honest, there are some counter-arguments to this. The first is a sell-off in treasuries could tighten liquidity. If global demand for US bonds weakens, yields might rise sharply and liquidity could shrink. That can pressure risk assets, including stocks and crypto. Higher yields can attract capital back into bonds away from non-yielding assets. The second is market stress could hurt crypto in the short term. When markets shake, traders often sell what's liquid, including their Bitcoin, to cover the losses in other areas. In August 2025, Treasury liquidity drains actually pressed crypto markets severely. This shows that under stress, crypto can correlate with traditional finance, not decouple away from it. Then we've got China's internal crypto policies are still being unfriendly. Even while diversifying away from bonds, China continues to ban crypto trading domestically. So even if macro flows benefit crypto internationally, China itself isn't pushing crypto adoption at home, which dampens institutional demand from within Asia's largest economy. So what should we take away? Let's break it into short, medium and long-term views. Short term, probably the next few weeks, macro news might increase some volatility. Bitcoin could dip or spike depending on how markets price the risk. And traders should expect volatility and not straight moves in any direction. Then we've got the medium term, probably over the next few months. Liquidations and rotation out of bonds could boost alternative assets. But if liquidity tightens, crypto may correlate with risk assets again. This means the macro narrative matters more than any single news piece. Then we've got long term. This is talking in cycles here. If global confidence in the dollar and treasuries weakens, Bitcoin will benefit. More institutional adoption and geopolitical diversification equals bullish news. This aligns with the emerging narrative of Bitcoin as a digital reserve asset, a story many long-term investors believe in, including me. Let's connect this news with the broader trend. Countries have been shrinking their US Treasury exposure. Capital is seeking hard assets like gold and real estate and crypto, and central bank policies remain positive in many regions, and stablecoins and digital assets are increasingly integrated into global finance. This isn't just one headline, it's part of a capital rotation narrative. In fact, as stablecoins grow and participate in treasury markets themselves, crypto's integration with macro asset flows is increasing. Basically, crypto, especially Bitcoin, is not just a fringe asset anymore. It's now part of how global capital moves when traditional anchors shift. Here are some key signals you should keep on your radar. The first is treasury yields. If yields keep rising with lower foreign demand, that's a sign money is shifting. Then we've got dollar strength or weakness. A weakening dollar would support alternative assets like Bitcoin. Then we've got crypto market correlation. Watch whether Bitcoin decouples from stocks during macro stress. That's a bullish structural sign. Then we've got regulatory signals. Global regulation, either supportive or restrictive, will reshape the flows into crypto. So my final takeaway, is this bullish? I think it is, but with context. This isn't a straight up signal like Bitcoin to the moon tomorrow. It's a macro narrative shift that supports the bull thesis over time. Traditional safe asset confidence is weakening. Hard assets are becoming more attractive and crypto increasingly integrated into global capital flows. Before we wrap up, if you want even deeper macro breakdowns, exclusive alpha on market trends, and crypto analysis you won't hear anywhere else, make sure you check out our podcast. It's on YouTube and, of course, on Spotify. The links are pinned in the description below, and also you can hit them up after this video. It'll be pinned on the screen. You'll hear full discussions on stories like today's, plus insights that go beyond the headlines. The kind that can actually help inform your trading and investing decisions. It's called the UK Crypto Podcast, and I host it alongside Paula Talks Crypto. If you've enjoyed this breakdown, drop a like, hit subscribe, and tell me in the comments, do you think this China move is bullish or bearish for crypto? I read every comment, so let's discuss it. Thanks for watching. I'll see you on the next one. Remember, hit that like, hit that subscribe. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.